Hey everybody, this is Jim at SP500chart.com. It is 4:10 on 11/11/2013, and we're going to take a look at the S&P chart. Nothing much really changed today, but it's still worth a look. So let's read this to you first. The website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a quick look. Okay, looking here at a 15-minute chart, if today was not the definition of buyers and sellers meeting in the middle and keeping it there, I don't know what is. This is the action for today. Really and truly just sideways. If we look at it even closer, you can see that that we opened, the low of the day was about 1767, the high was about 1773. The median or average price that we traded at during the day was about 1771 and change. We closed at 1771 and change. What an uneventful day. But what can we derive from this? Well, you know, we're back up very near our resistance line that originally turned the market back on the 30th and sent it down for about 20 plus points over the course of the next 2.5 days. We rallied back up to this level and then got hit pretty hard, losing even more than we did back in late October, running from about 1774 down to about 1747, a loss of about 27 points. We rally back and now seem to be rather content to be once again in the 1770s. I'm still watching this line with the idea that if we break out over this line, we will get over 1800, and that is based upon the general shape of what's been going on here, that being a constant line of resistance right around about the 1775 mark, and the fact that we had this inverted head and shoulders right here that did not pan out. Okay? By the way, there it is. That pattern didn't pan out. But it still had a bullish shape to it. It just didn't quite have the strength at this point to do what it needed to do to make its target. So it failed, and we came back down instead and made another low that is lower than the head of this. So therefore, this pattern is invalid. But I just want to remind you, John McGee in his book, Technical Analysis of Stock Trends, states that even a head and shoulders or inverted head and shoulders pattern, even if you see one of these and it fails, it often still tells you something about the underlying current of the markets. So, I'm not losing sight of this, but this is no longer a driving pattern, I don't think. Instead, I think what we may be looking at is larger than this, and if we do get above this 1775 line, then I believe the larger pattern will actually take us up to about roughly 1802. So guys, really, this is the same information that I shared over the weekend. It's just that now we have one more little piece of the puzzle here, And remember, we've been seeing these inverted head and shoulders patterns actually end up being inverted shoulder and head patterns. Now, if you're a new subscriber, and I know there are some, what I mean by this is typically when you get an inverted head and shoulders pattern, you get a dip, which is the left shoulder, a larger dip, which is the head, and then a second dip that is not as deep as the second one, but rather a third one that is not as deep as the second one. And when you get above this line, that's the confirmation of your pattern. Well, we've seen on about at least three occasions over the past year and a half where we would get the left shoulder, the head, and really no right shoulder to speak of. The market just seemed gung-ho to get up and out of that pattern, and we've seen those work. So I am open to the idea that we may, if this does end up being an inverted head and shoulders pattern, we may have that little truncated right shoulder again. So just something to be aware of. So guys, there's your video for the S&P 500 day closing November 11th, 2013. I want to thank you for watching and thank you for your support. And just one quick thing I want to let you know. On January 1st, 2014, the subscription rates for SP500chart.com are going to go up just a little bit. Not much, just a little bit. If you are already a member and you've already subscribed, you're locked in for the length of your subscription. But if you're thinking about it and you haven't done it yet, sometime between now and the end of the year would work to your advantage. So just think about that. Thanks for watching. Take care.